Good morning. It's Jonathan Barratt with the morning debrief, and obviously quite an exciting night last night. There's no doubt about it. Quite a lot happening, particularly in Europe. A lot of people concerned that the debt contagion in Spain is, or from Greece, will actually spread obviously to Spain and Portugal. We had a news yesterday about a credit union in Spain that the Spanish central bank has said they're seizing. And this caused a ripple effect through all the markets and caused confirmation of some form of contagion. But in reading through the fine print, I think the market really did get ahead of itself, primarily because when you actually go through the reasons why they seized it, it really has nothing to do with the current debt situation. In fact, this is a concern that overlays from 2007, where the Central Bank of Spain has actually been trying to tidy up a lot of property concerns and all that. So when you look at it, this is a process which has been happening for a long time. The Spanish authorities just got upset with what was occurring, and as a result of that, they moved in to seize the union. So it really isn't a current situation. It's an overhang, and it seems to be contained. But what we're seeing is that the US market took it in its stride last night, took on board what was concerned, looked at the consumer confidence and the chances of recovery, and basically said, well, okay, we'll take that on board, but it's not that bad. And when you really think about it, those engine rooms of growth, the real engine rooms of growth, are America, India, and China, and the peripheral economies. And when you really look at the fact that they should not be included, Europe is an area of growth, but not as much as the US and Asia. So take that in stride. And the market's actually said that currency markets held up quite nicely, and the Dow actually, in my mind, actually behaved quite nicely. S&P bounced off its lowest level all year, and I think that's an encouraging sign. The other thing is that we know where we're wrong, and I think that, to me, is the most important thing, also in a lot of trades. Anyway, let's have a little bit of a recovery. Let's have a look at what's happening there. As we know, usual, looking at Bloomberg, looking across at Europe, the Stoic was down 2.73 points. The FTSE was down 2.54. The DAX was off 2.3 and the CAC was down 2.9. So that in itself a bit negative there. Our local market was also quite negative during that. But when you come and look across at what happened in America, you can see that we're only down 22 points, 10,043. The Nasdaq was down 2.6 and the Russell was down 1.9. Just having a quick look here at the local market, the SPY actually closed up. Now that is a bit of a turnaround, and I was actually quite encouraged by that. There's the 4,337 for the June contract. That's actually up 65 points. So that to me is certainly good. Looking at some of the news last night, stocks in the US recover from rout. S&P index holds above the year's low. That's pretty good. And US consumer confidence rises to its highest level since 2008 on job optimism. And I think, as I mentioned, this is all very positive, in line of just this confidence and also that optimism on jobs, because that is the engine room. And also, as you know, the US is an engine room of growth, and so is India and China. And if these economies can pick up, they'll certainly be able to help Europe. Remember, Europe doesn't really outperform anything. It moves, it's quite a lethargic economy and not as dynamic as the others. And when I see numbers like that in the US, I'm encouraged. Okay, let's have a look at some of the other markets now, and just the ones we follow. Obviously, dollar index, that's very interesting. Dollar index, 86.45. That had a high of 87.55 and has come off it quite sharply. Okay, that does, in my mind, does cement a double top in there. You can see that the previous high we got there was 19th of May. It's the 25th, 26th, and we've just come off that there. It is quite in my mind, a double top. The other important thing to think of is that if it breaks through that area, we know we are definitely wrong. As far as a low-risk trading opportunity, it suggests that the US dollar will remain relatively weak. Okay, let's have a look at some of the others. And dollar index, let's have a look at the Aussie. Aussie's low, double bottom there as well, and we've had a huge rally off that low. 81, actual low I think we got there was 80.95, maybe a little bit lower than that. And 80.65, sorry, was the low. We've seen a good solid bounce off that, back just under 83. Dips on the Aussie, I think, can be bought with a stop below that level. Quite comfortable with there. Euro, you can also see 123.72. We've had a great bounce as well from that low, and that sort of cements a little bit of a low there in place as well. So that's dollar looking a little bit weak. Gold looking okay, 1,200, and that's a good rally. That will pick up in terms of any concerns we'll find that have a weaker dollar concerns. So quite happy on that front. And also some of your softs. Now this is going to be quite interesting. Softs and some of your primary inputs. Crude we're long, wheat and corn we're all long, and soya. But as you can see, first on crude, had a good strong bounce off that low, and that is encouraging. Copper steady to lower, but still above its support. And wheat, corn and soya all looking, although they are off, still looking quite strong. One thing to note, particularly on some of these commodities, is the risk aversion that's gone through will affect production in some primary inputs, and as a result of that, if in fact these economies come off, there'll be a little bit of a hole that needs to be filled quite quickly. As a result of that, could see some of our commodities pick up from these areas, and that's the call we have at the moment. Okay, in terms of economic calendar, most important things out today. Let's just have a quick look. Bernanke speaks at Bank of Japan conference. In Australia, you've got Westpac leading indicators, construction work done, which will be important. New home sales and durable goods in America, and actually are looking for a positive number there in the durable goods, up about 1.1%. So new home sales, also looking for a positive number there. That will also allow momentum to pick up, for dollar to go down and equities to go up. So let's have a look at that. Department of Energy numbers are also out as well. So that'll be quite important. And we've got merchandise trade in Japan. So if anything, there's quite a lot to look at, quite a lot to absorb. But I think the long commodity play at the moment is okay. And also I don't mind still holding on to that Aussie and that Euro. Well, that's about it from me. Hope you have a great day. Happy trading, and we'll talk to you tomorrow.